But unless they make these tough decisions, and it doesn't matter who is in those seats, their businesses are going to change, and they're going to change in ways that make them viable for the future. So it's not really about the personalities. It's about putting in place good plans that will be successful for the future and pay back the taxpayer.
Okay, clearly the future is your concern, although, you've only got your job for another 6 weeks. Let's be frank about that. But, clearly a lot of analysts are saying, aren't they? A lot of analysts are saying this 14 billion is only going to be the beginning. Are we going to be looking at big numbers further down the track? Are you braced for that? I mean, are you ready for that? Do you accept that as part of the deal? Maybe $100 billion plus?
I wouldn't put any number price tag on it, but I think the important thing, Charles, is that when you get to the end of this bridge loan period, that the only way a firm can get any additional long-term financing from the federal government is if they are executing a very drastic restructuring plan that will force concessions on everybody involved across the scope of the business. So the question is, if there is going to be more money involved, what does the taxpayer get for it? And what it will get is the ability to be paid back in a firm that has made very difficult choices and forced concessions from dealers, unions, debtors, everyone involved in the business in order to make it successful. So the taxpayer is getting something for that investment. If the auto companies do not follow through with those plans, the very first thing they do is pay back the taxpayer, and that's what this financial advisor will have the authority to compel.
Okay, Tony Fratto, thank you very much indeed for your time. Deputy Press Secretary of the White House joining us there live from Washington. Now, as Congress and the White House come up with their proposal for the auto sector, car makers are promising more hybrids and electric cars. But are they really the answer to the industry's problems? Poppy Harlow from CNNmoney.com is in New York with more on that. Would you drive an electric car, Poppy? I guess that's the acid test, really, isn't it?
I would love to, but they're expensive, Charles, and that's a big problem right now. There is so much buzz about green cars, but they're not going to save Detroit anytime soon, and that's the big predicament that we're in right now. For starters, these high-tech, zero-emission cars cost millions upon millions of dollars to create. This is at a time when cash is running out, or at least running short. Case in point is GM's, General Motors, electric plug-in, the Chevy Volt, that's set to debut in the United States in 2010, but GM says it won't be profitable for at least a decade, mainly because the battery costs so much to make. Falling gas prices are really complicating the matter. They're pushing the demand for hybrids in the United States much lower. Take a look at these statistics. In November, hybrid sales fell 50% from a year ago. They now stand at the levels that we saw back in 2005. Hybrids, of course, Charles, are more expensive. As I said, that's not a good thing to be during a recession. Charles?
Okay, but what about the long-term view? I mean, clearly these cars are not going to save Detroit overnight. But in, over the 5 to 10 year view, presumably there must be some value in investing in this, if you like, this strand of the future of the U.S. car industry.
That is exactly what the heads of GM and Chrysler and Ford are saying. That's what the auto experts we talk to say. Even though they don't help the bottom line right away, closing the door on hybrids and plug-ins would put Detroit behind the curve. Once again, there are certainly some lawmakers that agree. Take a listen to one.
A business model premised on bigger cars, wider highways, and more oil is a failed equation. Any recovery of these companies will require more than just fresh cash. It will require a change of culture.
That change could be a while coming. A provision in that bailout legislation that negotiators have reached an agreement on would have blocked automakers from suing states with tougher emission standards than the U.S. federal government has. That part of the legislation, Charles, has been dropped. Back to you.
Okay, Poppy Harlow, thank you very much indeed. Poppy Harlow, of course, from CNNmoney.com, where you can get all the business headlines and track stocks you like and see and ones you don't like, actually, for that matter, and see the latest reports from our business correspondents. That is all to be found at CNNmoney.com. Well, as car makers wait to see if Congress will give them the billions that they're hoping for, there are still questions over whether all three big companies deserve the same treatment. As Bill Tucker explains, not all the major players are in the same position.
For some, the potential bailout of Chrysler comes down to this simple question asked in a direct way last week.
If the private equity company that currently has the major holding in Chrysler has $24 billion currently in assets, and they will not put forth any more money to stave off bankruptcy, how can we, in all good conscience, expect the taxpayers to take on this substantial cost?
Nardelli's answer was that Chrysler's owner, Cerberus, has already put billions of dollars of its own capital at risk in an industry that needs help.
They already put the equity in to create the company. We did another $2 billion drawdown on equity on the car side. They've continued to put more equity into our finance company.
Yes, but Chrysler critics say this would be a case of public money, taxpayer money, going for private gain. One expert says there is a big difference between a private equity company and a publicly traded company, which is subject to tough accounting standards.
The private equity group only really reports to itself and maybe its lenders, so the transparency with respect to their financial and other disclosures would not be the same.
But Chrysler will almost certainly get whatever the other automakers get, to the dismay of those who oppose any bailout, like the Free Market Cato Institute.
Every time governments have some role in running private companies, market forces go out the window, and it's all just about who has the best lobbyists and who has the best insider contacts.
Few, if any, can top Cerberus in that regard. Its executives include former Treasury Secretary John Snow, former Vice President Dan Quayle, and former Louisiana Senator John Breaux. Bill Tucker, CNN, New York.